Two high probability outcomes for Bitcoin, both of which lead to the same outcome. We've been doing some close analysis on Bitcoin for quite a few weeks and months now, and it seems to be unfolding as anticipated. So today we're going to do a deeper dive on the two high probability outcomes and what is likely to lead to in the second half of 2022. If you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jigir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, now exclusive on cryptocurrencies. Before we start, quick shout out to my wife, Mandy, Aphrodite's MUA, literally won an award last night. This is a ninth award. This one says Britain's Asian Wedding Awards 2022 Makeup Artist of the Year. Shout out to my wife. Awesome job. Wicked. That's like literally, I think it was 100 people competing. So she won South, and now she's won for the entire country. So thumbs up. But now back to Bitcoin. Let's jump in. All right, Bitcoin. We did a video in November 2022, the 100x business plan, maximize your chances to make big money in the bull run. However, in November, this is November, guys, 6-7 months ago, what we said, and go back and watch the video, is the likelihood is this move, the November run, the July to November run, is a correction, and we should anticipate a wave 4. Now, I was anticipating possibly a minimum of what's called a ABC flat, where it doesn't exceed the previous low, but it has come further down. But the main thing was that we were already anticipating a wave 4, which means a move to the downside before moves to the upside, right? And that's what we're seeing happening right now. Then I did another video, quite a few videos on Bitcoin, urgent Bitcoin crashing further, Bitcoin to go below 30,000. So this was on February 22nd, 2022, so 3 months ago. And again, we're just doing an update that the market's unfolding with what looks like to be an A, B, irregular, C pattern, and we should anticipate still this wave 4, right? So we didn't really change our minds and thinking on since November of 2021 to February of 2022. So now Bitcoin seems to be unfolding as anticipated. So what you want to be really, really aware of, markets are driven by fear and greed. And typically, more often than not, moving 5s and 3s. And if we can spot those patterns of the psychological mood of the price action, we'll be able to see 2 steps ahead of time what's likely to occur next. So let's just dive into, we're going to do 2 scenarios, right? But they pretty much lead to the same thing. So we don't need to get too anal about it. So this is what we said in February. Looks like a nice A, B, and we should anticipate some type of wave C, right? So if we just go back, if we look at the November video, that's what we were saying over here. November, you can go back and see that data. And again, over here, just anticipating this wave 4. Now, it seems to be unfolding pretty textbook. I mean, you know, this part is very, very steep. It's like jumping off a cliff. But the price ranges are pretty much there. So I'm going to delete that for a second. I'm going to come back to that in a second. So what we want to look at is if this model holds, what looks like to be from 2017, this wave 1, what looks like to be a wave 2. We could argue this a wave 2 or this a wave 2. Then we've had obviously a massive bullish movement from March 2020, you know, COVID, bang, all the way up to April. This is when I did my first video and was anticipating this correction. And now it looks like how it's unfolded since then. Let me zoom in like this. Because the market structure gives us clues. It gives us massive clues on what's likely happening. And what we said at the time was this potentially could have been the end of a correction. But because of the structure of it, it hasn't got those characteristics of an end of a correction. So then we said, okay, it's likely to be more of a wave A. And then this looks like a clean A, B, C of a B. So we should anticipate one more move to the downside. That's what we've been saying for quite a while now. And we don't know how it's going to unfold because there's like a few different types of ABC corrections. If I just show you this, I'll show you this. I've got a course. I'm going to just dive into my course. I'm just thinking it will make more sense. So if you just go to r15finance.com and then we're just going to log in. I got this one here. Elliott Wave and Fibonacci course. I'm trying to quickly show you there's 4 main types of ABC corrections. The most common is a 3-wave ABC zigzag. So I'm just going to go down here. Let's just quickly get to this section here. Here we go. Lesson 6, 4 types of ABC correction. There's a zigzag, there's the flat, there's the irregular, and there's the running. So it looks like we are forming lesson 8, an irregular ABC correction. I'm going to show you this just because it's really, really relevant. Let me just pause the video on the section itself. Let's just get the pattern. All right, yeah. Geez, where's the pattern? Okay, hold on. There we go, this here. All right, here we go. So the irregular ABC correction, if I just do it like this, let me just do it like this. Okay, the irregular ABC correction, what we want to be aware of, this is textbook stuff. You know, an A to the downside, a B that exceeds the former high, and then a C that goes below the former low, right? So we got a nice A, B, a B that exceeds the former high, and then a C that exceeds the former low. That is an irregular ABC correction, right? That's relatively common, not as common as an ABC zigzag. Now I'm showing you that because it looks like that's what we have, right? What do we have over here? Let's just draw it like this. Looks like we've got a wave A as normal, right? So this part is normal. This wave A, let's just draw it in a straight line, is normal. The wave B in 3 waves has exceeded the former high, and the wave C has now that we have this data, has exceeded the former low. So this is an irregular, what looks like to be, right? High probability, an A, B, C, irregular ABC correction on Bitcoin. So now let's just look at, okay, if that's the case, what will invalidate this wave count, right? We always want to look at that. So with Elliott waves, you've got a few different rules, and they hold, right? These are rules, not guidelines. You have guidelines with Elliott waves, some things that typically occur, but then you have rules. And if these rules are broken, then you have to reevaluate the market. And that's why we're going to look at 2 scenarios. So if this is a wave 1 over here, well, a wave 4 should not trade into the range of wave 1. It should not close into this range, right? So that's the extreme ceiling. So if this current move to the downside, what we're looking at as A, B, C, breaks this low of around $20,000, then we need to reevaluate. But it looks like we are coming towards the end of a typical ABC correction with Bitcoin. Now let's just do a bit of price analysis. We're just going to do, I'm going to just do 3 main things. First, what we're going to do, actually, shall I do, yeah, I'm going to do a couple of things. I'm just thinking, yeah, I'll do this. Let me just see where these price ratios fall. I want to just see where does the 1.272 fall on this. It's bang on. It's literally bang on, right? Bang on over here. We've got this movement to the downside over here. This looks like I've gone into a lower time frame, some type of 1, 2, possible 3, 4, and then a 5. So a 5-wave sequence. So a typical end of wave 5 is if we measure here to here. These are the typical ratios. There is one other ratio, but it goes into the range that will invalidate this over here. We're going to look at that case, that scenario. And we also want to do just an external retracement on this move to the upside. This is what we did the last time in our last video. This is a typical end of wave 5. End of wave 5 of wave C. That's what we're looking at over here. Right? So here, we look like we're at this zone of Bitcoin. Now, it could go lower. I mean, it could break down here, right? We don't know. But it looks like some type of correction is forming, and it's this massive sell-off, massive panic buying, panic selling, and it's going to down here, right? Okay, if this holds and this low does not get exceeded, and we create a low over here, and we get a bounce up, right? A bounce up, what typically would occur will be a continuation of the former trend. Okay, what's the continuation of the former trend? Well, this is the former trend. We should anticipate a continuation, right? This is just forgetting that is Bitcoin, forgetting that is cryptocurrency. I'm just talking about human psychology, buying and selling behavior when these patterns unfold time and time again, right? So that's one case. Now, if we're looking to buy Bitcoin, it's bad practice to try and catch it whilst it's falling this steep, right? Because it's too risky. Better practice, what WD again said, is buy on the first reaction to the reversal. So ideally, we want to see some type of movement to the upside. Wait for a first pullback. And then look to enter on the next swing high, something like this, right? If this occurs. All right, so that's the first case scenario, right? We're looking at what looks like to be, it's just basically what we've been saying since November, February, and now. There is an alternative wave count because we need to also be open, because it's probabilities, never certainties, that this low, it might just continue going. And if it breaks to 20,000, which is the peak of 2017, we have to reevaluate. So we're going to jump into another chart. This is a weekly chart, but still Bitcoin. Just keeping it nice and clean. We go, okay, if the price does break this low over here, what will be the alternative wave count? Now, the only thing that kind of is a big question mark about the wave count I'm about to do is that this move to the downside is very impulsive and not a corrective structure. But, you know, if this low gets broken, then what we're looking at is a potential structure that shows, again, it's better to wait for this to happen, but potential wave 1, wave 2, a wave 3, a wave 4, and a wave 5. And this is the alternative wave count. And this over here looks like a very steep A, a very narrow and shallow wave B, and then a final wave C to the downside, right? If we see a break below here. If that's the case, and why I said at the beginning, both scenarios likely lead to the same outcome, is if it does end up being an A, a B, and a C into this range, like so, well, what the markets tend to do, let me just change this to the same, let me just make sure it's the same as the other one. Yeah, that would do. If this is the case, what markets tend to do, it moves in 5s and 3s. And if it unfolds into a typical textbook ABC zigzag, we're talking about this here, we're talking about the other type of correction. If I just go back a lesson on this and go to, if I go to lesson, I think it's 7, 6, 6. Yeah, the most common type of correction is an ABC zigzag, which looks like this. But a wave 2, you go, yeah, what are you going on about? What are you going on about, mate? All right, let me just clarify. This potentially could be a completion of a 5-wave sequence of a macro, very large cycle of Bitcoin of saying a wave 1. Right, so this is the alternative wave count. Potentially, if we're getting this steep ABC correction, this ABC could be a potential wave 2. Now, this is what we're going to lean towards if Bitcoin breaks 20,000. If it goes below 20,000, it just looks like this. Now, I know there'll be a lot of doom and gloom, and it's, you know, geez, terrible for the markets. We know that, we understand that. So now let's just look at, let me just get rid of these lines, keep the numbers there, keep it nice and clean. If this is the case, let's just assume for a second that Bitcoin goes down here. What is the analysis? Well, most corrections occur between 50 to 78.6% retracement. So we're just going to do a retracement on the closing price. It's going to take this low over here and this high over here. Help if I click it. Oh no, did I hit click? Let's do that one more time. Low to this high. There we go. And the 3 ratios that I want are 50, 62, and 78.6%. And you see that's where that 78.6%, which is below what we're talking about in terms of the 20,000 high. Also, what we can do is look at just this movement here, because this is also relevant. But we want the 100%. So before we did this, but what we want is the most common for this wave count will be the 100%. So this will be a high probability wave 2 of Bitcoin. We can do some other analysis, but the main thing I wanted to get across is if this occurs, what typically happens after a wave 2? Well, it was a wave 3. And wave 3 is a very impulsive movement to the upside. And it's often the most impulsive wave to the upside. Yeah, so the typical, and again, I'm just ignoring that as Bitcoin for a second. I'm just doing pure technical analysis based on the psychology of buying and selling to the side. If we just measure this wave 1, let's just say it did get down to 14 or 15 or 16,000. This is the secondary analysis in the sense of this is if Bitcoin breaks 20,000, goes below, then this becomes a high probable outcome. Until that happens, the other is the higher probable outcome. If that, hopefully that makes sense. So it's conditional. It's conditional. This is me talking about. I used to be a math teacher back in the day, teaching secondary and up to A level in the UK, and these are just some jargon that I'm talking at. All right. So the next level, if in this case, it will be actually, believe it or not, Bitcoin going below 20,000 is more of a bullish case in the second half of this year and possibly going into the following year, which sounds insane, right? The lower would actually have a more bullish case. Why? Because the next wave tends to be a bigger, more expansive wave called a wave 3. And the ratios at 1.618 is 120,000 Bitcoin to 186,000 Bitcoin. These are the two typical wave 3 ratios where markets expand and contract. So again, we're looking at this where it goes movement to the upside. We got this, what looks like to be a correction. If we break 20,000, then this is likely to be the high probable outcome. And then the next bullish cycle would look like this, more than likely. If we do not break the 20,000, then it's more likely to be a wave 5 on the bullish side in the second half of the year. We can do some price analysis on that. I don't know if it's that valuable right now. We could just do our basic one. We'll just do the basic external retracement of this. Let's just say it did hold it here. And a typical wave 5 would be in the region of 1.618. These are the most common. So this is what I mean by it's less bullish, because the numbers will be 79,000 to 94,000 Bitcoin in this scenario. Now it's always probabilities and never certainties, and whatever happens the next couple of weeks, we've been anticipating this since November, since February, sideways to down. The momentum is down, but we are looking like we're coming towards a higher probability low of some sort, whether it ends up being here or whether it ends up being down here like we saw in the second scenario with a wave 2 structure. Either way, if and when, more than likely, the correction ends, we should see a continuation, either as a wave 5 or as a wave 3. We don't know that information yet. No one has a crystal ball. However, looking at the market structure, that's likely what's going to happen. Woo! I know. That was a lot. But that's the high probability 2 outcomes for Bitcoin. So if you like today's content, like, subscribe, hit the bell notification. I'm here to help you as much as I can so we can really be 2 steps ahead of the market as opposed to be chasing our tails. Take the Fibonacci and Elliott Wave Masterclass. It covers this stuff in depth, and you just get to see the method behind the madness, where you see it not only in Bitcoin, but more often than not in many other cryptocurrencies. You get instant demand. If you end up buying one of my courses, you get a private invite to my Telegram group. We do weekend workshops, so we can do some live analysis. And just again, we're just aiming to increase the probabilities, because we just know that we can never have certainty in the market, but we can manage our risk. All right, let's finish on a quote. Quote of the day. I've got a workshop starting in 10 minutes. This is for my team, my R15 team. We do a special session every single Thursday. Anyway, here we go. Chapter 5. Leonardo da Vinci. Simplicity is the ultimate sophistication. I know there's a million indicators out there and a million pieces of news to justify Bitcoin is going down. But if we ignore all the noise, and understand that the price is a reflection of human psychology, and we can look at the price independently of the news and the fundamentals and know that people have fear, greed, optimism, pessimism, euphoria, depression, the 2 extremes. And that literally causes the mass herd psychology to buy and sell. That is reflected in the price. So simplicity, momentum, pattern, price. If we can look at those with clear eyes, like clear. Because if you watch the news, Jesus, it's like just constant. In these kind of conditions, every bit of negative news, in more positive conditions, every single positive piece of news, that's false information appearing real. It's literally false. It's not what's really driving the market. It's just buying and selling behavior. And that's why I truly love Elliott and Fibonacci, because it allows me to have an objective viewpoint so I can see, as opposed to being tarnished by my thoughts, being tarnished by the news. Hence, I just don't watch the news. Then we're going to have a higher probability of winning this game of crypto tennis. Like, subscribe, hit the bell notification. Hopefully you're okay. I think the second half of the year, either way, how this unfolds, is going to be a positive second half of the year if it continues to unfold as it's been unfolding in terms of textbook Elliott and Fibonacci patterns. So, the fat lady is not singing. She's not singing yet. The game is not over, though it might feel like it's over. This is the very beginning of crypto, of this $1 trillion blockchain trend. We're only 12 years in, 12, 13 years in. We are at the very, very beginning of the biggest wealth transfer in all of human history. And this technological revolution is going to be bigger than the internet itself. And if you can take a step back, breathe, and just going, look, even though on paper it's down, as long as you don't sell, as long as you're holding, look at the longer term viewpoint, there's downs and there's ups. There's depression, there's euphoria, there's optimism and pessimism, and then there's ups and there's downs. There's bulls and there's bears, bull markets, bear markets. What we're looking to do is keep it simple as much as possible, keep it mechanical, keep it objective, and not let the emotions drive the behavior or the decisions. Allow the logical, objective information, and hopefully you're seeing that now that we're looking at it in the way of ABC corrections. Whether it's a wave 4, whether it ends up being a wave 2, either way it doesn't matter, because a wave 5 or a wave 3 is what normally comes next. And that will be very optimistic for the market. So hang in there. Then we're going to be okay. This conversation that we're going to have in August, September, October, November, maybe December, I think it's going to be a different story. But for there to be ups, really ups, sometimes it has to be downs, and we're just in that down phase at the moment. So look after yourself, and I'll see you very soon.